today. Now, crude oil prices drifted lower on Wednesday, caught in the undertow of a broader global market sell-off and a strengthening United States dollar, and as traders weighed the implications of higher supply and uncertain demand, the energy sector mirrored the unease seen across financial markets and worldwide. Brent crude futures were down 6 cents, or about 0.1%, at $64.38 a barrel. That's about 9:30 a.m. this morning, over in near a 2-week low hit in the previous session. United States West Texas Intermediate crude slipped 10%, or 0.17%, to $60.46. The marginal declines reflected not just oil-specific factors, but also a broader risk of sentiment gripping investors. Adding to oil woes was a relentless climb in the United States dollar. The dollar index, which tracks the greenback against the euro, sterling, yuan, and 3 other major currencies, held steady at a 3-month high. The currency's strength was underpinned by divisions within the Federal Reserve's board, signaling slim chances of an interest rate cut at its December policy meeting. Well, let's look critically at the crude oil market, price fluctuations, and other developments around the market. My guest is the head, Natural Resources and Climate Governance, Budget Foundation, Mr. Enebi Okpalua. Mr. Okpalua, I must thank you so much. It's good to have you on the program this afternoon for this conversation.
Thank you for having me once again. It's a pleasure to be here.
Okay, then. I'll start on a very optimistic note. Let me put it that way. Nigeria is set to increase, or projecting to increase, production. That's according to our minister, Heineken Lokpobiri. He talked about increasing production. That's crude production, saying 2 million barrels is the target in the shortest time. I think we should start with that. How feasible is this? And considering developments around OPEC, do you think that's a step in the right direction, wanting to improve production quota at this time?
Well, Nigeria has always had the ambition to increase production. Even when we were producing around 1.2 million barrels per day, the former administration always said the goal was to increase production. And when the current administration began in 2023, they made it clear that their goal was to expand oil and gas production and consumption around the country. So that has always been a given, has always been a goal and a target for the federal government of Nigeria. I think the numbers so far, if you compare the last 2 years, are reflecting some form of, let's say, stability in terms of oil and gas production. Compared to 3-4 years ago, where we were doing an average of 1.1 million barrels per day. Now we are doing an average of like between 1.4 and 1.5 million barrels per day, closer to 1.5 million barrels per day. So in terms of improvements, yes, there have been improvements in production in Nigeria compared to January 2023. I think there's an 18% boost compared to last year. The average this year between January and September is 14% above the average for the whole of last year. So there's an improvement in local production for crude oil in Nigeria. So as for how, if we can hit our target of 2 million barrels per day, I think it's a discussion that goes beyond just capacity or sufficiency. I think there are a lot of other things to consider. OPEC met, I think, a couple of days ago and decided to rein in their anticipated, let's say, reduction. So OPEC was expected to increase production in the first quarter of next year, but decided to change, not to do that, to do the reverse and hold production steady as it currently is. They only allowed like 137,000 barrels per day for December, and that tells a lot as to how much capacity OPEC can allow. And if Nigeria is going to stick to OPEC quota, then in the foreseeable future, that might be difficult to attain 2 million barrels per day. However, I think what we still need to do as a country is address those bottlenecks that may be limiting the production. It's not just an issue of whether we can or cannot, Presently, if you want to do 2 million barrels per day, it's difficult because of some challenges like maybe theft, vandalization, and other issues that may be causing production glitches. So I think let us sort that out as a country. And then when we have the liberty to produce at capacity or at our quota, then we can do so. Mind you, the reason OPEC cut Nigeria's quota was because we weren't able to meet that target before. Our target, our quota before was around 1.7 million barrels per day, but we consistently failed to hit that target, and so they cut us down to 1.5. So perhaps in the coming months, that quota might be reviewed, and if so, then Nigeria has more room to increase production within the OPEC limits.
It seems we are doing pretty well with regards to revving up our production. You know, when, you know what used to happen before now, I used to quote that, you know, Mr. Tony Elumelu was at a meeting where he also mentioned what they used to lose before to oil theft and all of that, and what is happening at the moment now. So, but there are still other developments where some say Nigeria's oil and gas industry is becoming, in quotes, more attractive. Just to take it up from where you stopped, those executive orders, those developments from the presidency and all. So I want to ask you really, do you think that we are attracting enough investment this time? And if we are not, what more can be done to attract the needed investment into this sector, despite the challenges?
Okay, so I think I lost you for a minute there, but if I get you correctly, your question was around some of the policies that the federal government had rolled out earlier, and to what extent that may have attracted investment. So if Nigeria is in the right place to attract investments in the oil and gas sector, am I right?
Brilliant, yes.
Okay, yeah. So I believe the numbers this year have been quite encouraging in terms of interest in investing in Nigeria's oil and gas industry. I think we are doing, to some extent, we are seeing interest in Nigeria's oil and gas sector. I would say particularly, based on my perspective and what I have seen, particularly the downstream sector since the deregulation of that sector as well. For the upstream sector, I think there has been stability. We've had some control, at least to a little extent, over vandalism or theft. Or let me say we've heard fewer stories of those kind of cases. The main challenge to expanding investments in the upstream that I see would be the source of investments, and to see what kind of risk that investors are willing to stomach, and not just in terms of security risk. Now I'm talking about investment or market risk, primarily the transition risk premium. If you are going to invest a huge amount of money in a sector, money that you cannot recoup in perhaps 10 to 20 years, then you have to be sure that in that time frame, you'll be able to get your capital and get profits as well. So while the country is doing enough to ensure stability and ensure investor confidence, I think investors also have to effectively analyze, assess if the risk compared to the reward is attractive enough to put their money. I think the main challenge Nigeria will have is looking for investors who are willing to invest their money in the country. I think due to the recent developments in Europe, particularly in the United States, that have increased the appetite for fossil fuel, particularly oil and gas extraction and investments, perhaps you might have some investors who may be willing to take that risk, but they may be few, because these are long-term investments. Apart from dealing with issues around security, host community issues, you also have to factor in the situation where you need to get your investments back before an energy transition era fully kicks in.
All right, my first conversation, and I'm sure, I don't know if you listened to part of it, was around the 15% tax expected on imported fuel. But my question to you would be, this is to promote local refining, you know, local capacity and all of that. But also we have another report that says federal government is talking about sales of refineries to attract investors. How do we put this side by side? What do you make of this submission coming from the federal government?
All right, so anything regarding the NNPC refineries is a very, very sensitive area. So let's first start with the 15% tariff on imported petrol, imported fuel. So I think in the spirit of that policy is likely in the right place. We are trying to secure or protect local investors, protect local industry in the oil and gas markets, give investors the confidence that when they put their money in Nigeria, they will get it back. I think if you heard some of the comments from the Dangote group regarding the refinery, there are some comments that were attributed to the group head that if he had known, he wouldn't have probably built the refinery in Nigeria, or perhaps there's some, instigating some challenges regarding establishing the refinery in Nigeria. So I believe this kind of move would restore or promote confidence in other potential investors that would like to invest in Nigeria. And I think Dangote has proven that that kind of investment is possible and it can work. Recently, he announced that they are going to be expanding the refinery and doubling the capacity. Hopefully, we don't know how long that will take, but that is to tell us that they've seen the market prospects, not just in Nigeria, perhaps the wider West African region, or even the European markets. They've seen the markets and it's looking promising. So he has proven that that can be done and can be done to an extent. So giving investors that confidence is I think the spirit of that policy is in the right place. However, I do not know, and I'm not saying that this is the case, but I don't know if the timing is right. Right, we still, while a lot of people are, a section of the population are impressed with the Dangote refinery and happy with the fact that you are refining locally, there is still a segment that still looks at monopolistic tendencies, which for now we cannot, let's say, prevent as much. We have the Boa refinery coming up. We have the Watersmith refinery that is about to expand. So these are smaller refineries that may perhaps provide better security in local supply, but they are not yet fully operational yet. Dangote is still the big elephant, big dog in the yard, and so people believe that this might favor him more than others. But I think if we were to have an objective analysis of that, we have to know what extent Dangote's production has on Nigeria's total local production. For now, we have perhaps a few figures lying there in import numbers, but we do not have the data to fully back how much Dangote is supplying the local production capacity. We don't know how much imports are supplying to local production capacity. The agency, NNPRA, who is supposed to do that, hasn't published that report in about 2 years. The last report for local production is August 2023. And until those kind of data are made available, we can't have that kind of confident analysis where we can say, okay, the Dangote refinery has this share of the local market and this kind of policy will impact them to this extent. We cannot say the importers will be affected to this extent. Mm-hmm. And so that data is really, really critical for us to have an informed analysis. So I think while the spirit of the policy is in the right place, perhaps the timing may not be so. I for one, I am quite happy with the policy, but we also have to recognize the fact that we need to also balance it. Perhaps the timing for now, we could have done that now, we could have done that later. But like I said, until the data is made available, we cannot sufficiently say to what extent the refinery might benefit or not benefit from that kind of policy.
Mm. Now, almost finally, I saw Aramco, that Saudi Aramco's result, about $21 billion in dividends. And that has put our NNPC under the spotlight. You know, yesterday I also had this conversation around NNPCL and all of that. So what do you make of all of these national oil companies, how productive they've been, supportive they've been to their economies, and what we have down here in Nigeria?
Okay, so first of all, I think there are countries that you look and you say a national oil company can work. Right. For now, Nigeria isn't one of them. So if you look at the performance of the NNPC, so I will explain.
Okay, so please go ahead.
We have four refineries that we had one come back to life temporarily. Late last year and early this year, and then was shut down in May for 1 month. That 1 month has extended to about at least 5 months without any explanation. So I don't think that is not a model for a national refinery that works. All right, we have 4 refineries, no one is working. Well, that's the downstream section of the company, and then we have the upstream that has to do with production, where we still are struggling with. Well, things are improving now, but in terms of production, yeah, things are improving, but we are not functioning as where we ought to function. But when you look at Saudi Aramco, when they were initially valued, they were valued at $1.8 trillion, all right? And then in a short while, $2 trillion. Now, because of the global issues around fossil fuels, production, economic slowdown, global economic slowdown, Aramco is now doing somewhere around $1.6, $1.7 trillion in terms of valuation. If you were to value the NNPC, first of all, you cannot compare the NNPC to their Saudi Aramco. They are not on the same level. So in terms of the dividends that Aramco can give their own country, it will be much more than the NNPC. However, what is the NNPC doing in Nigeria? I don't think they are where they were before, but if you were to do a full assessment, I think the NNPC can do more. It can do more. We don't know if they've declared, but first of all, who are they declaring dividends to? The federal government is the only shareholder of the NNPC as of now. I think there are plans to go public, but we don't know exactly when. The NNPC is still remit. According to the NNPC, I think they've done 10 trillion naira this year, according to I think the CEO. But I think we will look at the data when it comes out. Nothing that is wrong, but I think having that kind of audited financial statements will help to give more credence to these claims as well in a way that is unassailable. So yes, are we doing better than, yes, the subsidy was removed, things are getting better, but comparing the NNPC to Saudi Aramco, it's like comparing a cat to a lion. I don't think it's a fair comparison in my this.
It's a cat to a lion. That's a big one. Well, finally, before I let you go, what's your outlook for the market as we move to the end of 2025? Crude oil market and, of course, the oil market in its entirety.
So I think we need to be quite cautious in planning as a country. As of now, the crude oil market is below our projected budget benchmark of $75 per barrel. So we need to be careful how we plan, especially for next year's budget, which for now we don't know where that will be. But I believe in terms of performance, we are still going to be at this level. I don't see crude oil price jumping up to $80 before the end of the year. I don't see it. And in terms of production, I think we can maintain production at this level, probably even do better. It's possible between now and December, but in terms of the crude oil price, it may remain at in the 60s, perhaps the low 60s for more indications. If things change, perhaps a new stimulus comes to the market, then it might jump maybe out to the high 60s. But for now, unless there's a serious shock, I don't think crude oil price will go above 70 before the end of this year. With the expected glut in the market for next year, because it is widely believed that the market will be oversupplied from next year, there's a chance that the crude oil price might also face challenges with going up, and that is why OPEC decided to rein in any additional production into the market.
All right.
And well, I mean, we will come to see this, but for now, I think the market will just hover around. Or I don't see the price going up anytime soon. And as for local production, it has the potential to remain steady and probably even do a little better.
Mr. Enebi Okpalu, I must thank you so much. Head Natural Resources and Climate Governance at Bojit Foundation. Thank you so much. Do enjoy the rest of your day. We appreciate your time.
Thank you very much.